What is online trading? Online trading is the act of placing a buy or sell orders for financial securities or currencies with the use of a brokerage internet-based proprietary trading platform. Financial securities are stocks, bonds, options, futures, and currencies can all be traded online. The use of online trading increased dramatically in the mid to late 90s with the introduction of affordable high-speed computers and internet connections. How does online trade works? So either you are a buyer or a seller. When you place your order, it goes through a brokerage house, which we are going to call the middleman, and on the other end you have the bank, which is the clearing house that is going to clear your position, whether you are on a buy on gold or you're a buy on the euro or the US dollar. Online trading is all about buying an asset at a discount and selling it at a premium, just like any other business. In this market, just as in other businesses where you're buying goods in exchange for money, in Forex, you're buying an asset, which is money, in this case, financing that purchase using money, which is another asset class, in exchange. Hence, the value of the currency that you're going to buy is relative to the currency you're using to finance the purchase. This creates what is called a currency quote, just like a quotation you ask for when you want to make an order of a specific product. So each country has their own official currency. Thus, due to people and companies engaging in international trade, it is a requirement to convert their currency to that of the country they are buying from, so as to facilitate the trade. This act of conversion is what is popularly known as Forex trading, converting one currency into another. Now let's give an example of how online trading works. So for example, Melissa is in South Africa and she wants to buy a C63 Mercedes-Benz from the UK, which will cost her an average of £150,000. However, she is using Rand as her country's official currency. Thus, she is required to send the equivalent in Rand, and the central bank will do the conversion at the intermarket rate. Therefore, the exchange rate or the currency quotation for Rand to pound will be charged at 20 Rand 27 cents for every pound. The Rand is written as GBP ZAR 20.27. Thus, it means the central bank will be buying every 1 pound at 20 Rand. Melissa will need 4,054,000 Rand, excluding bank charges, to make this transaction possible. Pound becomes the base currency, the currency where we are buying, while the Rand becomes the quote currency, the currency indicating the value of the base currency. So the Forex trading market is circulating an average of $7 trillion every 24 hours. Thus, currencies are bound to fluctuate in value based on various fundamental principles such as supply and demand. It has become easy for retail traders like you and me to also participate on this market and make profit by taking advantage of these price fluctuations. The million-dollar question will be to understand the core fundamentals of how price is delivered on the market and what moves the price of these currencies to be able to buy at a discount and sell the currency at a premium price. When you buy a currency, it means you are long, and the one you are using to buy the quote currency, it means you are short or selling. Thus, you're now in an open position, holding onto an asset that is fluctuating in value with the anticipation of either selling it at a premium on a later price. As we continue to look into how online trade works, when a trader decides to invest into a specific asset, you are able to buy that asset. In this case, we're using money, while using another asset, which is another currency. This exchange forms what we call a currency code. Hence, whether you want to buy or sell, we refer to this dynamic as trading a currency pair. So for example, you want to buy 1,000 euros quoted at 1,250 US dollar per euro. You would need 1,225 US dollars to do the conversion. Price of 1 euro goes up as anticipated, where 1 euro is now quoted at 1,2350. It means if you sell the 1,000 euros you were holding in an open position, you are then able to sell them at a profit. The profit will be the difference between your buying price, which is 1,250, and your selling price, which is 1,235, which becomes $20. So in summary, the purpose of this course is to equip you with the knowledge we believe will prepare you to make solid decisions as you enter into this leverage space. Future Gold Consortium has prepared a series of subjects and topics on financial markets and online trading that is a strong basic foundation for you to understand how to trade stocks, currencies, cryptocurrencies, and indices.